Have you become more defensive given the panoply of risks?
Yeah, no, absolutely. And I think having a neutral stance right now is absolutely warranted. If you think about what's still ahead of us, and most of these political events clearly having more of a binary outcome attached to them, you know, you have to take a significant stance if you wanted to add more risk at this juncture. We should not forget as well that although on a year basis, equity markets are more or less flat, year to date we are seeing very easily double-digit, up to 20% positive returns from equities. So at this juncture, to have a more neutral stance, I believe is the right stance to have. And you see as well that most investors have probably taken this position, you know, very well represented by these low-vol ETFs. The bond market, on the other hand, obviously is telling us again that probably being more cautious is the right way to look at the overall economy. We have seen a dramatic plunge in global yields, and as such, you know, what we should expect here as well is, you know, to bed in an outlook from central banks to it.
Can we just push a little bit deeper on the bond side, Sonja? I want you to have a look at this. Returns are rising. This is the bond performance year to date. It's up 8%. This is the best year we've had in bonds since, what, 2011?
Yes.
Would you be more inclined to take slightly more defensive? And again, we've had the whole duration trade this year. Does that remain intact for the fourth quarter for you?
So you're absolutely right. The duration trade has been incredibly successful. So again, I think what we have to understand whether this can continue from here is, point one, obviously continued central bank action. We talked about the Fed earlier. We have seen the ECB. You've highlighted obviously the Central Bank of New Zealand coming up. So there's been a lot of easing coming our way, which obviously has supported the duration trade. Now, with yields at these record low levels, obviously the duration sensitivity has gone up, and we have seen volatility across the bond complex already rising. A very interesting statistic actually is that since the beginning of the year, we have had more double-digit drawdowns in the long end of the US curve than we have had in equities. And it tells you that in terms of your overall asset allocation, you have to bear in mind that bonds obviously have taken a lot of the news already into their stride and have priced it. And again, so from here, we might well see more of a sideways movement, but with much higher volatility. And again, you know, you might want to have a tilt towards long duration, but depending on you know, where we trade from here on the back of the political events.